solution to question 6 on the 2019 higher level Leaving Certificate accounting paper. It's a club account question. On the left-hand side of your screen, you can see financial information relating to Crestwood Golf Club for 2018. At the top of the question, you are given a list of the assets, liabilities and reserves of the club on the 1st of January. Then you're given details of money coming in, receipts, and money going out, payments of the club during the year. And then you're given additional information and instructions down the bottom of the question. You need to prepare the accumulated fund on the 1st of January, an income and expenditure account for the year, and a balance sheet at the end of the year. And then you have one other question here at the bottom to do. Now we'll start with the accumulated fund. So we put our heading up first, accumulated fund of Callan Golf Club on the 1st of the 1st, 2018. So how do we arrive at the accumulated fund of the club on the 1st of January? What we need to do here is we add up all the assets of the club. Now, assets are items of value that belong to the club. So all of the items of value that belong to the club on the 1st of January, and we add up all of the liabilities of the club on the 1st of January. Liabilities, money owed, in other words. So we figure out what items of value does the club own on the 1st of January, and how much money does the club owe on the 1st of January, and what reserves does it have on the same date. The difference between what you own and what you owe, including your reserves, will give you your accumulated fund, which is the figure that we're looking for in this question here, in this part of the question. So, we'll start at the top by listing the assets. A good place to start is the first paragraph. So if we have a look here, the first asset or item of value will be clubhouse and course. It's something of value to the club, so it meets the definition of an asset, and it cost €550,000. Now at this point you just need to be conscious of the fact that all of the fixed assets, and the clubhouse and course is a fixed asset. It's an asset because it's something of value. It's fixed because it's going to last more than a financial year and to contribute towards the earning capacity of the club. Okay, so it's a fixed asset. But we need to be aware that all fixed assets have 2 years depreciation already accumulated on them up until the 1st of January. So 2 years depreciation has already been written off on all of the fixed assets. So what we need to do now is consider the fact that while the clubhouse and course might have cost the club $550,000, it's not actually worth $550,000 on the 1st of January. So we need to calculate the depreciation. Now, in order to figure out how to calculate the depreciation, you need to move down through the question for more details. If you go down to adjustment 7 here, you will see that it says that the clubhouse and course are to be depreciated by 2% of cost. When your depreciation is a percentage of cost, we call it straight line depreciation, and it will be the same every year. Anyway, in order to calculate the depreciation here for 2 years, you take 550,000, multiply by 0.02 and multiply by 2 because 2 years. Now that will be treated as a negative asset because it reduces the value of the asset, which is the clubhouse and course. Now we move through our list to the next item, bar stock. Bar stock is something of value to the club on the 1st of January. If it has stock in its bar, then that's something of value. And the bar stock figure in this case is 5,800. The next item we meet here is equipment. That's also a fixed asset, something of value that will last more than a financial year. The equipment cost you €26,000 when you bought it, but again we need to be conscious of the fact that 2 years depreciation has accumulated on that. In order to work out what that depreciation is, we need more detail. If we go to adjustment 7, it tells us that equipment is to be depreciated at a rate of 20% of cost. So again, it's straight line depreciation. So to work out how much depreciation would have accumulated over the last 2 years, it's 20%, 0.2, multiplied by 26,000, multiplied by 2 for 2 years. Again, we include that as a negative asset there. Moving through our list, the next item we meet is investment interest due. So this club must have money in investments, and every year, presumably, it earns a return on those investments. Now, on the 1st of January 2018, it looks as if they are due to receive €400. If the club is due to receive €400 on its investment, then that's something of value to the club because we look at it optimistically that the club is going to receive that money in the very near future. So it's an asset, something of value, the fact that there is income due to the club. Bar debtors is the next item in the list. Bar debtors are an asset, so it's money owed from people who you have sold goods to from your bar, people who haven't paid you, customers who haven't yet paid you. They will pay you presumably in the near future. So that's money owed to you that is on its way in, so we treat it as an asset. The next item is life membership. We'll deal with that in a few minutes. Creditors. Creditors is a liability, money owed to your suppliers for your bar. Wages due, money owed again, so that's a liability. Levy Reserve Fund, that's a reserve, so these items will go under the second heading. Subscriptions received in advance. We need to think carefully about this one. If you've received some subscriptions from your members in advance, you technically owe that money back to them on a temporary basis because they didn't have to give you that money in advance. So when you sit down on the 1st of January, you temporarily owe that money back to your members. When we say owe money, straight away we're talking about a liability. Okay? Now with higher level questions, you need to look a little bit deeper to see whether or not there were any other assets there at the beginning of the year that aren't immediately obvious in the list above. So if we have a look into the receipts section here, there might be some hints for us. The first item that we notice here is that we received investment interest of $2,800 during the year, and that interest was received on investments which the club had. Now, there were no mention of investments up here, but obviously if the club has received investment income, it must have investments. Now, apparently the rate of return on these investments is 4%. So normally what you would earn in a year in interest is 4% of the investment. So if we can figure out what the total interest for a year is, then we should be able to figure out what the investment is. So I'm going to do that over here in a working on the right hand side. So this is working 1. Okay, so now we feel that there might have been an investment there at the beginning of the year. We need to work out what that investment is. So you can start with this figure here. You know you've received $2,800 in investment interest during 2018. So we'll start with that. Now we need to recognise the fact that that income that you've received, some of it might be for last year, some of it might be for next year, so not all of it might relate to 2018. And we're trying to isolate what the investment income is for 2018, this figure here essentially. So we'll work our way towards that. So while we receive 2,800, it might not all be for 2018. So this is where we need to start looking at whether or not there was anything due or prepaid at the beginning or end of the year. At the beginning of the year, remember you had investment interest due. If you have investment interest due at the beginning of 2018, it means you had investment interest due at the end of 2017. So basically that investment interest due at the beginning of the year would have been due at the end of last year, so it relates to last year. So we're going to exclude that. So some of the 2,800 you received was actually relating to 2017, the previous year. It was that 400 that was due at the beginning. Now, is there any mention of investment interest at the end of the year? We're just going to have a look at that first. We're told in adjustment 3 that investment interest due at the end of the year was 300. So while you might have received 2,800, and we know 400 of that was actually for last year, there's still 300 due at the end of the year. That wouldn't be under receipts. That's still due to you. If it's due to you at the end of 2018, it must relate to the 2018 financial year, okay? So what we're going to do to that is we're going to add it on. So anything that relates to 2018, you include it. Anything that relates to any other year, you get rid of it basically. So that leaves us with a figure of 2,700, which should be this year's investment interest. Now we know you've only received some of it so far, there's still 300 of it due, but the aim was to figure out what's the total investment interest for 2018. So now that we know that our total investment interest is 2,700, remember the interest is always 4% of the investment. So we should now be able to figure out what the investment is. Well, if that's 4%, you divide by 4 and multiply by 100 to get your investment, which was 67,300. So now we know the club must have had an investment of 67,500 and it would have had that investment on the first day of January. So that's an additional hidden item that we have just discovered by having a look at the receipts and payments account. Okay. Sorry, I'm just putting it in here. And there you go. So we're going to put that in here, that investment that we discovered that must have been there on the 1st of January. Okay then, so we're going to keep looking here to see whether or not there are any hints to any other assets that might have been there at the beginning of the year. I'll stick with the receipts here for a minute and have a look and see. If you go down to the final receipt there, the transfer from the Building Society, it looks as if you must have had money in the Building Society and you closed that account and transferred it into cash here, into the receipts section of the receipts and payments account. So if you're receiving or receipting 10,000 euros from the Building Society, we can assume that there must have been 10,000 euros sitting in the Building Society on the 1st of January. Okay, you must maybe perhaps then close the account or withdrew 10,000 from the account and transferred it into cash. So we need to include the Building Society balance at the beginning of the year, and that's 10,000 euros as an extra asset. Now we need to look a little bit deeper just to make sure that we're not missing anything that would have been there on the 1st of January. If you look down into the subscriptions working here for a minute, you might see something else of interest, particularly number 4. We're told that this year's subscriptions, which are here, 126,900, include a mix of items really. And one of the things that that subscriptions figure includes is a levy for 2017, which is last year, of 50 euros each from 20 members. So this figure here actually includes a levy which would have been due from the previous year. And that levy is 50 euros on 20 members, 50 euros each. So essentially what we're saying down here is that on the 1st of January 2018, these members must have owed you that levy. So that's what we call a levy due, and it would have been due at the beginning of 2018. So that's another asset. It's money due to the club. In order to work out what it is, you take 50 and multiply by 20. So in this case, it's 1,000 euros. So now, having scanned from the beginning of the question right through to the end of the question, we have identified all of the assets that must have been there at the beginning of the financial year. And in this case, it adds up to 628,780. Now we need to turn our attention to the liabilities of the club on the 1st of January and the reserves. So we know what the club owned, but what did it owe? We go back to the starting list here again to find these items. The first one we're going to pick out here is life membership. So it's not uncommon in clubs for members to pay not just their membership for 1 year, but a lump sum which will entitle them to use the facilities of the club for the rest of their lives. So essentially that means that the club receives a lump sum of money and that member can then use the facilities during future years. Technically, when the club receives life membership, it owes that money back to the members until such time that amount that the club owes reduces as time goes by. Okay, so essentially when you receive that money from your members, you technically owe it back to them, and the amount you owe back reduces as time passes. Okay, so if you owe that money back to the members, then that has to be a liability. So we're going to include it here as one of our liabilities, 45,000. Okay, bar creditors are next. So you must have bought goods into your bar and you obviously didn't pay your suppliers, you bought on credit. So you owe those suppliers money for the items that you bought and you owe them 750 euros. Anytime we say owed money, it's a liability. Anything else? Well, it looks like you owe your wages to your workers, 1,640 euros. So let's include that as an additional liability. I'm going to the last one for a second. Okay, subscriptions received in advance. Apparently some of your members paid you subscriptions in advance for the 2018 financial year. So they paid upfront for the year. Again, technically you owe that money back to the members until time passes, okay? So we're going to put the subscriptions in and we call those subscriptions prepaid, paid in advance, 1,900. Now I skipped one and that was the Levy Reserve Fund. Not only are we including liabilities here, but we're also including reserves. It's not uncommon for a club, especially if they're planning a large capital project, something that's expensive. It could be the building of a new stand. It could be the renovation or resurfacing of the pitch. So when the club is going to engage in a large capital project like that, it will sometimes ask its members to make a contribution towards the cost of the project. So the money will be used specifically to help fund that project, and it's usually of a capital nature. And what we call that money that is that the members of the club give to the club is a levy. So essentially the club is levying its members. Okay, so it's capital income in a sense, all right? So what we're including it in here as is a reserve, and the reserve fund at the 1st of January amounted to 30,000. So the club has collected 30,000 from its members to fund a specific project, and it's a long-term capital project. Okay, so that's it there. Now, again, we may need to look a little bit deeper into the question to find out that there were possibly other liabilities there at the beginning of the year as well. So if you look under the payment section here for a moment, you will see here that during 2018, the club pays back a bank loan and 18 months interest on that loan. Now, the club does that at the end of May, and the amount that the club pays back is 20,900. Some of that 20,900 is the loan, and some of it is the 18 months interest, essentially. So we need to sort out what's what here. We need to take a closer look at that loan. Okay, so we're going to have a look at that over here now in working number 2. Okay, and we'll see it over here on the right hand side. So we know they're making a repayment of 20,900, and we know that that's the loan plus 18 months interest. So we could say that that 20,900 is the principal, the loan, plus the interest for 1 year, plus the interest for 6 months, 18 months in total of interest. So we could say that the 20,900 is the principal, which is 100%, 1 year's interest, which is 3%, you can see that there, 3% per annum, and a half year's interest, which would be 1.5%. So 20,900 is 104.5% if we put that together. So to figure out what the loan is, the principal, the 100%, you just divide by 104.5 and multiply by 100. And that gives you the loan, which in this case was 20,000 euros. So now we've learned that of the 20,900 that you paid back, 20,000 of it was the actual loan itself. So the balance, the 900, the difference, must have been the interest. So that's what we're having a look at down here. So we could say that the 18 months interest they referred to must be 900 euros. If we know what 18 months interest is, we can figure out what 1 month's interest is and what 13 months interest is. So let's just go back to the question here for a minute. We are preparing the accumulated fund. So we are trying to work out what was the loan on the 1st of January. I think we have that more or less figured out here, 20,000. All right. And we also need to figure out how much interest was due on the 1st of January. So if we just have a look here for a minute, you repaid the interest, which we now know was 900 euros, on the 31st of May. So only 5 months, of that 900 euros relates to 2018. And the rest of the months, 13 months, must have been due, or relate to 2017, and must have been due on the 1st of January. So of the 18 months interest, 13 months would have been due on the 1st of January, okay, 2018. So 13 months interest can be worked out by dividing by 18 and multiplying by 13, 650 euros, as you can see there on the right hand side. So we're going to put that in here as the interest that is due at the beginning of 2018. Okay, so on the 1st of January, you owed the loan and you owed 13 months interest. Now, we just need to check to see whether or not we're missing anything else in terms of liabilities that would have been there at the beginning of the year. And there's one left, the bank overdraft. If you look at the receipts and payments account here for a minute, you'll notice that you're starting with a credit balance. So your opening balance in cash is on the payments side. So that means that you must have owed that money on the 1st of January 2018. Okay, because your opening balance is on the payment side, it's money owed on the 1st of January. So if you owed money, we can call that a bank overdraft. Okay then. If you add your liabilities and reserves, you get 107,240. If you subtract those from your assets, you get your accumulated fund, which is 521,540. So what does accumulated fund actually mean? Well, if the club owns assets worth 628,780 on the 1st of January, the question is, where did it get the money from to own all those assets? And that question is answered in this section here. It received 45,000 from life membership. It didn't pay its bar suppliers, essentially, owes them €750. It didn't pay all of its wages bill. Okay, it owes its employees €1,640. It received 30,000 from its members to fund a capital project. Some of the members paid their subs in advance, so that was extra finance for the club. They have a bank overdraft, so they overdrew their bank account. They have a loan. And they have interest which they haven't paid on their loan, amounted to €650. So that's where it got the money from. That's where the club, it's essentially its sources of finance, long-term and short-term. So if the club owns assets worth 628,780 and they owe 107,240, where did they get the rest of the money from to own all these assets? They must have gotten the rest of the money from funds that they have accumulated over the years. So in a lot of cases, that will be the profit, accumulation of profit that the club has earned over a number of years. So in this case, that's 521,540. So the next thing we need to do now is we need to prepare the income and expenditure account for 2018. Now, when we're looking at income here, we're talking about the total income for 2018, and income is money earned. So it's total money earned for 2018. Okay. Now, in order to figure out what your income is, it's a good idea to use your receipts as a guide. So you can use this as a sort of checklist, and it will help you to calculate what your income is. So if we start with the first receipt here, subscriptions, 126,900, we can adjust that figure to work out what our subscriptions income was for 2018. Because remember, this is cash received, but some of that could have been for last year, for next year. It might include a mix of other items besides subscriptions. So it's a little bit messy at the minute. And what we need to do is take that figure, sort it out, and come up with the subscriptions figure that relates to 2018, because it's only 2018's income and 2018's expenditure that we can include in 2018's income and expenditure account. Okay, so let's have a closer look at the subscriptions. So we'll start with the figure we're given there. We know we received 126,900. Okay, so this is going to be working 3 here. So you start with that figure there. That's our starting point. Now, what we need to do next is we need to essentially exclude anything that relates to last year, exclude anything that relates to next year, and exclude anything else that shouldn't be there. So let's have a look up the top. On the 1st of January, you're told that you received subscriptions in advance, 1,900. So on the 1st of January, some of the members had already paid you money in advance for 2018. Okay, so that figure there, all right, relates to 2018. Because it relates to 2018, you can include it. You add it into this year's subscriptions figure. Okay, so anything that relates to 2018 you can include, anything that doesn't you exclude. So that opening subs prepaid will relate to 2018. It's paid in advance for 2018, so you include it. Now, let's have a look down through the question and see, are subscriptions mentioned anywhere else? And you can see that they're heavily mentioned here in adjustment 4. So you're told that subscriptions actually include a number of items possibly that it shouldn't include. First of all, it includes 5 new life memberships in addition to the 15 from 2017. So remember at the beginning of the year you had already collected life memberships of 45,000. Apparently now we're learning that that's life memberships from 15 members, okay? So that there is the life membership you received from 15 members in your club. So if we divide that by 15, that should tell us what one life membership is. And that might be useful because our subscriptions includes 5 life memberships and it shouldn't, okay? So essentially what you need to do is figure out what is 5 life memberships. Well, you take 45,000, divide by 15, and that'll give you 1 life membership, and then you multiply by 5 to get 5 of them. So 5 life memberships is the equivalent of €15,000. So now that needs to be excluded from your subscriptions figure, because we want just pure subscriptions for 2018. So we need to take all other items out of there. Okay then, so that's the first one dealt with. We're also told that the subscriptions figure that you received of 126,900 includes subscriptions for next year amounting to 900. Anything that relates to next year, we need to exclude. We're just trying to isolate the subscriptions for 2018. So we exclude the 900. Why? Because it relates to next year. So is there anything else? It also includes a levy for 2018 of €50 on each on 600 members. We don't want the subscriptions figure to include levies. They are completely different things. So we need to take that levy out of there. So we take 50, we multiply it by 600. That's the 2018 levy, and we take it out of there. That's why it's in red. Okay. The next thing we need to do is look at adjustment 4. That subscriptions figure that we received this year also includes a levy for last year of €50 on 20 members. €50 each. Again, we don't want to include last year's levy in here, okay? We just want this year's subs. That's all we want. So we take last year's levy out, 50 multiplied by 20. And if we make those adjustments, we add on the 1900 and take away everything else, we'll get this year's subscriptions figure. So that's pure subs, and it's purely for 2018, okay? And that's 81,900, and that's what we had aimed to achieve, to figure out what that was. So we put our subscriptions figure in here like this, and as we worked it out there, 81,900. So there's your first source of income sorted out. Now, again, we check our receipts section and use it as a guide to figure out what our second source of income is. So underneath subscriptions there, you can see that we've received 8,500 from catering during 2018. So not only do we have catering receipts though, but if you look over to the right hand side, we also have catering purchases. So what we need to do in a case like this is figure out whether or not we made a profit or a loss on catering during the 2018 financial year. Catering is mentioned in one other place though, so we need to gather together all of the information to get a proper overall picture of what's happening there. You'll see it's mentioned in adjustment 1. Our bar stock at the end of the year actually includes catering stock of 400. So we need to consider that at this stage here as well in order to figure out what the profit or loss is that we made on catering during 2018. So what we're going to do is put those 3 pieces of information together. So we start with the money that we earned, 8,500. We'll have to deduct our catering purchases, which amount to 4,900. But we'll also need to recognise that we still have stock at the end of the year. So not all of those purchases were used during 2018. So the working is going to look something like this, and I have it in a bracket here, okay? You take money in, 8,500, subtract money out, that's your purchases, 4,900, but then add back on the 400 closing stock because it hasn't been used, okay? So to get a true idea of what your profit is, you need to consider the fact that you still have some items sitting there unused in closing stock. So you add that back on again. You don't include that as a deduction, okay? So your catering profit, if you work it out, is €4,000. So let's have a look at the next item. Interest on 4% investments. Now we've already prepared an investment interest working over here on the right hand side. Our aim now, remember, is to figure out what the investment income is for 2018. So if we have a look over here at our earlier working, we should be able to identify what that figure is. So remember here we figured out that the total interest for 2018 is actually 2,700, and we spoke about that previously there. Okay, so now we just slot that figure in. So that's the total investment interest for 2018. The next item we meet is bar receipts, and you notice you also have bar purchases. So it looks as if you're running a bar trade here. So essentially what we need to do is figure out whether you made a profit or a loss by running that trade. And in order to do that, we need to gather together everything basically that relates to the bar. So anywhere you see the word bar mentioned, you need to gather that information together now. And what we'll do is we'll use that information to construct a trading account. So what we're going to do is we're going to take the information, put it into a working, and figure out whether or not we've made a profit or a loss. Okay. So what we do is, in any trading account, we start with the sales figure, and then we have our cost of sales, okay? So what was the bar sales figure? Well, you can start with this figure here, the amount of money you received, but remember it's this year's sales you want to figure out, so you need to exclude from that anything that relates to last year or anything that relates to next year, essentially. So you start with the money that you received, which is the 66,200, and you can see that here in your working, okay? Now you need to make adjustments because you had bar debtors at the beginning of the year, 480. So some of what you've received here is possibly from those bar debtors that owed you the money at the beginning of the year. Now that relates to last year's sales. So what you do is you take your 66.2, you subtract the 480 because that 480 would relate to last year's sales, okay? You can see that in the bracket there. Now we need to see whether or not there were any bar debtors at the end of the year. If you look at adjustment 2 here, you see that there are bar debtors at the end of the year amounting to €500. Now, you are still owed money, basically, into your bar at the end of the year amounting to €500. You're owed money by your bar customers. Now, because you're owed that money, it's not included in the receipts figure, obviously, but it must relate to sales that happened during 2018. So because you're owed the money at the end of the year, it relates to sales that happened during the year, during 2018, you add it on. And that'll give you your bar sales figure, which is 66,220. So start with what you received, and then you need to look for debtors at the beginning and debtors at the end. If there's debtors at the beginning, that's for last year's sales, so you exclude that. And if there's debtors at the end, you need to include that because that will be for this year's credit sales. So now essentially you have this year's cash sales and this year's credit sales in that figure there. Okay, now you need to figure out the cost of those sales. And the basic working is opening stock plus purchases less closing stock. Okay, that's your basic working for cost of sales. So let's start with our opening stock. The opening stock figure is given to you at the top of the question normally, and in this case here, it's given 5,800. You can see it there. All right. So you put that in first, your 5,800. Then you add on your purchases. Now remember, we're talking cash purchases and credit purchases, total purchases for 2018. A good starting point would be your figure here. What did you pay out for purchases this year? 38,700. But the question then is, was some of that to pay off last year's creditors? And are there any creditors at the end of the year? Are there any credit purchases that you haven't paid off yet? So start with your 38,700. If you look at the beginning of the year, you'll see there were creditors at the beginning of the year of 750. They would be for purchases you made last year. So some of that 38,700 is probably to pay off those creditors. So you're going to exclude that or deduct that, which is 750. You see it there because that's for last year. And then you need to look down the bottom of the question to see if there's any mention of bar creditors at the end of the year. And there is. Apparently you have creditors of 1,230 at the end of the year. Now they are people that you bought goods off for your bar and that you haven't yet paid them. So they're not included under payments, obviously. They're not included in that figure there, but they are additional purchases that were made. We call those credit purchases. Because they're additional purchases, they need to be included, okay? Because in our purchases figure, we include cash and credit purchases for 2018. So that gives us a total of 39,180. So the cost of goods that we had available for selling, 44,980, but we didn't sell all those goods in our bar because we had closing stock in our bar at the end of the year. Goods that were unsold. So if we have a look here, the bar stock at the end of the year was 13,600, but of that 400 was catering stock. So if you take the 400 away, 13,200 would have been bar stock. And you subtract the closing bar stock of 13,200, that gives you your cost of sales. So that's the cost of the items you sold in the bar, and that's what you sold them for, okay? Making yourself a profit of €34,440 in the bar over the past year, okay? So 34,440 goes in here as your bar profit, And that's that part sorted. So let's go back to the question again and see what our next source of income might be. Entrance fees. So you received 12,000 from entrance fees from your club members during 2018. Okay, no mention of entrance fees at the top of the question or at the bottom of the question, so they don't need to be adjusted. You put them in as they are. What you received is the amount that for 2018. The next item you see is annual sponsorship, 7,400. Now remember, income, it has to be money earned during 2018 or for 2018, and it has to be regularly earned, money regularly earned, okay? Regular income. Because of the word annual here, we can be confident that this is regular. So for that reason, we can include it as income. It's not once off, okay? 7,400. A national lottery grant. The grant from the National Lottery was received on a once-off basis to support the day-to-day activities of the club. It is to be treated as a revenue item. So you are told here that even though it's a once-off grant, because it's been used to support the regular activities of the club, it should be treated as a revenue item. So it's okay to include it here under income. Okay. And that's your lottery grant of 15,500. The next item you see here are competition receipts. So it looks as if you've run a competition. A competition is an event. And if a club runs an event, what you should do is you should figure out whether you've made a profit or a loss on that event, and that's the figure that should go into the income and expenditure account. So you can see the competition receipts are 28,000, but you had to buy competition prizes, if you look over here, for 20,100. So in order to figure out whether you made a profit or a loss on that event, you take your money received and you subtract your payments of 20,100. In this case, we made a profit, 7,900. Now, if on completing that working, you figured out that you'd made a loss, you can include the loss under expenditure. But because it's a profit, I'm going to include it under income. Lastly, if a transfer from the building society, that's not a source of income, okay? So you just need to look a little bit further down through the question to see if there's anything else. There's something here you need to watch, okay? Remember we spoke earlier about life membership and that it's not unusual for members of the club to pay an upfront lump sum so that they can use the facilities of the club for the rest of their life. So it would be unfair to include all of that life membership, that lump sum, as income in one particular income and expenditure account. It would inflate the profit of the club artificially that year, and it wouldn't be a fair reflection of what's going on. So essentially what you need to do is take that life membership and you gradually recognise it as income over a number of years, okay? In this case, you're being asked to recognise the life membership as income over 10 years. So you kind of filter it through your income and expenditure account over a period of 10 years. So the question is, what is your life membership, first of all, at the end of 2018? Well, remember at the beginning of 2018, it was 45,000. And then you received 5 new life memberships. And do you remember that we worked out what the life memberships were in a working over here? Do you remember we worked out that one life membership would be 45,000 divided by 15, and that means that 5 life memberships is 15,000. So essentially you had 45,000 in life memberships at the beginning of the year, and you received an additional 5 life memberships, which we worked out to be 15,000 in our working. So 45,000 plus 15 gives you 60,000. So at the end of the year, we have life memberships of 60,000, and we need to transfer those life memberships in as income into the income and expenditure account over 10 years. So we're going to be taking the 60,000 and splitting it over 10 years and including 6,000 a year as income in the income and expenditure account. If we do that and we add up all of our sources of income for 2018, we will get a total income figure of 171,840. Okay, the next thing we're going to turn our attention to is the expenditure of the club for 2018. So expenditure, regular running costs of the club, that's what we're looking at. So if we use our payment section as a guide, it will help us figure out what our expenses were. The first item we meet here under payments is bar purchases. Now we've already dealt with the bar and we've calculated the bar profit and we've fed it through the income and expenditure account. Catering purchases are next. Again, the catering event has been dealt with already. Purchase of equipment. Equipment is an asset, not an expense. Okay, for it to be an expense, it has to be a regular running cost. Equipment is not something that a club would buy regularly. Rather, it's an asset. Okay, so I'm going to ignore that for the moment when I'm listing my expenditure. The next item is sundry expenses, 81,500, and that would be our first item of expenditure here. So we just put it in as it is. Sundry expenses aren't mentioned anywhere else in the question. They're not mentioned at the top or at the bottom, so we can just go straight ahead with it. Competition prizes are next. We've already dealt with the competition. We've worked out what the profit was. We've put it through the income and expenditure account. Coaching expenses are next. Now, our coaching expenses are 5,600. That's what we paid out. But you will notice at the top of the question that there are wages due to our coach at the beginning of the year of 1,640, because we're told here that those wages at the beginning of the year were due to the club coach, okay? And we're also told that there are wages due at the end of the year of 2,500. So when we're working out the coaching figure, we need to take those two pieces of information into account. So we put down what we paid, and we subtract the amount that was due at the beginning of the year, because that would have related to last year. And we add on the amount that's due at the end of the year, because that relates to this year. Essentially, it's 2018's expenditure we're trying to arrive at. So we include all figures that relate to 2018. That's why we take the 1,640 away, because that related to 2017. And we add the 2,500 on, because it was due at the end of the year, so it must relate to 2018, which is this year. So that gives us a total figure for coaching of 6,460. So now we look for our next expense. If we look at the receipts and payments account here, we will see that we have paid back a bank loan plus 18 months interest during the year, and that amounted to 20,900. We've already established that 20,000 of that was the loan and 900 was interest. So 900 of that figure was 18 months interest. Now, if you have a look here at when the loan and the interest were paid back, they were paid back on the 31st of May. So essentially, of that interest of 900, 5 months of it relates to 2018 and 13 months of it relates to 2017. So if 5 months of this €900 relates to 2018, we need to figure out how much that 5 months interest is. So we'll go back to the working we did earlier relating to the loan. Remember that we established that 18 months interest was €900. 1 month's interest would be €50. You just divide by 18. So if we know that 1 month's interest is €50, it should be easy enough to figure out what 5 months interest is. We just take 50 and we multiply by 5, and that's €250. So that's the portion of the interest that relates to 2018. Okay, then we keep moving along here. There's nothing left in the payments section, as you can see. So what you need to do next is just check down the bottom to see whether or not there are any other expenses that we need to be aware of. Remember earlier on, we realised that fixed assets have to be depreciated, and that equipment is depreciated at 20% and the clubhouse is depreciated at 2%. Depreciation basically is going to be an additional expense here. It's a loss in value on your fixed assets, which can happen for a variety of reasons during the year. So that loss in value is treated as a business expense, all right? So we'll start with maybe the clubhouse and course. It's depreciated at 2% per annum. So that would be 2% of 550,000. So we'll work that out and put that in here as the depreciation figure. 2% of 550,000 gives you 11,000. Now we need to work out the depreciation on our equipment. So we're told that equipment is depreciated at 20% of cost, but we're also told that we need to depreciate equipment owned on the 31st of December. So in this case here, if you remember, we owned equipment at the beginning of the year which cost us 26,000. But we purchased additional equipment during the year on the 1st of April, and that equipment cost us 15,000. So when we're calculating our depreciation on equipment, we need to consider that we held this equipment here for a full year, that's 26,000 at 20%, and that we held this equipment here for 9 months. So that would be 15,000 at 20% at 9 months. So that's how we're going to calculate our total depreciation on equipment. And you'll see that here in the working that we've done here. So 26,000 at 20%, and then the new equipment you bought, 15,000 at 20% at 9/12 for 9 months. So your total equipment depreciation is €7,450. If you add all your expenses, they add to €106,660. And if you subtract your expenses from your income, you will get an excess of income over expenditure, a profit in other words, of €65,180 for 2018. So that's the income and expenditure account completed. Now we turn our attention to the balance sheet. So the balance sheet is essentially a list of assets, liabilities and reserves of the club on a particular day, in this case on the last day of the financial year, which is the 31st of the 12th, 2018. So we start by listing our fixed assets, then we look at our current assets, and then we start looking at our liabilities and reserves. So what are fixed assets? Well, fixed assets are items of value, that's what an asset is, fixed that will last more than a year. Tangible, you can see them. If you read it backwards, items of value that will last more than a year that you can see. So what items of value does the club hold on the 31st of December that will last more than a year and that you can see? If you go to the beginning of the year, it always kind of gives you a good guide to the fixed assets that you might have at the end of the year. So at the beginning of the year, you had clubhouse and course, 550,000. There's no change to that during the year, so you still have that clubhouse and course at the end of the year. Okay, depreciation. How much depreciation had accumulated on that clubhouse and course right up to the end of 2018? Well, you might remember, if you look back up to your accumulated fund, that you had 2 years depreciation on it already, and that just brought you up to the beginning of 2018. So that was 22,000, and that you charged an additional depreciation of 11,000 for 2018. So if you add the 22,000 and 11,000 together, that gives you 33,000. That's all depreciation accumulated up as far as the end of 2018. So you take your cost and subtract your accumulated depreciation to get the net book value. What other assets would we have had, fixed assets, at the end of the year? Well, at the beginning of the year, we had equipment. And if you remember, we bought some more. So we would have had our equipment at the end of the year as a fixed asset as well. So let's put that in. So how much did the equipment cost at the end of the year? Well, it cost 26,000 at the beginning of the year. You purchased an additional 15,000 euros worth of equipment. So that brings the cost up to 41,000 euros at the end of the year. What about our depreciation on our equipment up to the end of 2018? Remember again, you had 2 years already that would have accumulated up to the beginning of 2018. That's 10,400 euros. And then you charged an additional 7,450. So if you put those two figures together, the accumulated depreciation amounts to 17,850, giving you a net book value of 23,150. If you total your totals there, you will see that the net book value of your tangible fixed assets amounts to 540,150. Okay, so they are the tangible fixed assets, but there's another type of fixed asset as well, what we call a financial fixed asset. Now, financial fixed assets essentially are long-term investments. And if you remember, as we worked our way through the question here, we discovered that we had investments at the beginning of the year, and we would still hold those investments at the end of the year. Remember, we established that we had investments amounting to 67,500 at the beginning of the year. We need to include them here as well because you still held them on the 31st of December. So your total fixed assets amount to 607,650. Now we need to consider our current assets, and remember, it's our current assets at the end of 2018. Current assets. An asset is an item of value. Current, it'll probably be gone within the next 12 months, okay? So what items of value do we have on the 31st of December 2018 that will probably be gone within the next 12 months? Very often you find these down in this section here, all right, at the bottom of the question. So let's have a look at the first one here, bar stock. At the end of the year, you had stock, and in this case, it amounted to, 13,600 in total. Now, we know some of that was catering stock, but essentially whether it's catering stock or bar stock, it's still a current asset. So I've just included it here as one figure, 13.6. I presume that that stock will be sold next year, turned into cash and spent essentially. Okay, so it'll be gone within the next year. Is there anything else? Well, you can see bar debtors, people who owe you money to do with your bar, okay, customers in other words. You were owed €500 at the end of the year. So that's another asset, okay? €500 owed by your bar customers. Number 3, there's investment interest also due to you at the end of the year. So that'll be money coming in over the next 12 months as well, hopefully. And that's another current asset at the 31st of December. Something of value that won't last long. It'll be gone within the next 12 months. There's one other one here that we need to be aware of, and it's the closing balance on your receipts and payments account. Because the closing balance is here, it means your payments must have been less than your receipts. If your payments are less than your receipts, that's money left over, okay? So I'm putting that in here as a closing bank balance of 83,300. If we add our current assets, they amount to 97,700. The next part of the balance sheet requires us to start looking at liabilities, money owed. These here, this creditors due within a year, essentially that's money owed that will have to be paid off within the next year. Again, we often find that information at the bottom here. If you look here in adjustment 2, you can see that we have suppliers to our bar that we owe money to at the end of the year, and we owe those suppliers €1,230. So that's money owed, and it will certainly have to be paid off within the next year. So that meets the definition of a creditor due within 1 year. Okay, a current liability, otherwise known as. Is there anything else down here that strikes us? Well, if we have a look down the bottom here, we will see that there are subscriptions prepaid at the end of the year. See here? So including in your subscriptions figure is subscriptions paid in advance for next year amounting to €900. If your members pay you subscriptions in advance, essentially when you sit down on the 31st of December, you treat that as a liability, a short-term liability. Why? Because technically you owe that money back to them, because they didn't have to give you those subscriptions in advance, okay? So subscriptions prepaid, income prepaid is a current liability or a creditor due within a year, okay, at the end. Is there anything else there that we need to be aware of? Well, if you look to adjustment 8, there are wages due at the end of the year amounting to 2,500. So that's more money owed that'll have to be paid off within the next year. Okay. If we add those together, you get 4,630. You take your current assets away from your current liabilities, and that gives you a working capital figure of 93,070. You add that on to your fixed assets, and that will give you total net assets of 700,720. So essentially that's net current assets. It's current assets after current liabilities have been taken away. So that's net current assets, and that's fixed assets. So that gives you total net assets. Okay. Then you head into what we normally call the finance by section. And now you're looking at long-term liabilities. Short-term liabilities have to be paid off within the next year. Long-term liabilities don't have to be paid off for more than a year. So usually here you're talking about long-term loans. Life membership is another one, okay? Now, we did have a loan, but we paid it off, so there are no long-term loans here. So what we're looking at in this section here is life membership, all right? So you know the way we had life membership of 45,000 at the beginning of the year. We received an additional 15,000. Remember, we worked that out, bringing us up to 60,000. Now, some of that 60,000 we've included as income in this year's income and expenditure account. So if we take away the amount that we've included as income this year, that will give us the balance that's left in our life membership account, okay? So in this case here, the balance that's left in life membership will be the 60,000, okay, minus the 6,000 that's gone into income this year, which gives you 54,000 euros, okay? That 54,000 will be included as income in future income and expenditure accounts. So it's the balance left in the life membership account. So it's essentially what we owe back to our life members at the end of 2018. To our long-term liabilities, we will add on our accumulated fund, which is the accumulation of profits that the club has made in previous years. So this is kind of like the reserve section now that we're heading into, okay? So long-term liabilities, reserves. Okay, your accumulated fund on the 1st of January, your accumulation of profit from past years was 521,540. So you're going to include that here as your first reserve. Then you made a profit this year to add on to that, okay? And you'll find that at the bottom of the income and expenditure account, 65,180. And then, because we're including reserves in this section, profit reserves and other reserves, you need to recognise that you have a levy reserve here as well at the end of the year. And in order to figure out what that levy reserve is, you go back to the beginning of the year. You had a levy of 30,000. But remember, levies were mentioned here as well. Is that okay? So you had a levy of 30,000, but then you received an additional levy of €50 each from 600 members during 2018. So if you take your 30,000 at the beginning of the year and you add on 50 by 600, which is an additional 30,000, your levy is sitting at 60,000 at the end of 2018. So your reserves there amount to 646,720. So the total of the bottom part of the balance sheet amounts to €700,720. Now, the only part of the question that we have left to complete is part D. In part D of the question, we're told that the club would like to build a new driving range at a cost of €350,000, and we're asked to outline the options available to the club in funding this project with reference to the accounts. So where might we source €350,000 in order to be able to afford this new driving range? Well, we have a look at the balance sheet first. We notice under financial fixed assets that the club holds investments, which are worth €67,500. So it may be possible for the club to sell those investments to generate €67,500 and to put that money towards the new driving range. So that might be one option for this club in terms of raising finance. What else? Well, looking here at the receipts and payments account, you'll notice that there's a closing bank balance of €83,300. So it may be possible for the club to use that money as well to put towards the financing of the new driving range. Now that would raise €150,800. But we need to stop at this point and just consider the fact that the money that we have in the bank, that €83,300, would also include levies that we've collected from our club members. Now remember, those levies are normally collected for a specific capital project. So they've already been earmarked, presumably, for a particular project. And therefore, that's what that money should be used for. So we'd actually really should exclude those levies from our bank balance figure. So what are those levies? Well, at the beginning of the year, we have a levy collected of 30,000, and then this year we collected an additional €50 from 600 members. So we had 30,000 collected at the beginning of the year, and we collected an additional 30,000. That's 60,000 in total. So I'm going to take the levies away and see how much funding we would have then. So you're talking about funds amounting to 90,800. Now remember, the cost of the driving range is 350,000. And if we could possibly raise 90,800, it would leave us with a shortfall of 259,200. So where might we source that finance? Well, one question you might ask is, could we borrow? Now, if you're looking at whether or not the club could borrow that money, you need to consider a number of different items. Firstly, you need to consider whether the club would have security for a loan. If you look at the fixed assets here, the tangible fixed assets of the business, they're worth €540,150. So there's adequate security there, if you think about it, for a loan of €259,200. The other thing you need to consider is profitability, because every year you need to be able to pay back the interest on the loan. The profit we made last year is substantial, €65,180. And it would kind of lead you to suggest that the club, if they maintain that profitability next year, shouldn't have any problem paying interest on the loan. But you just need to consider the fact that some of the sources of income there may not be regular, and possibly we may not be able to rely on those happening for sure next year. So we're talking about entrance fees, sponsorship, and the lottery grant. If you add those together, that's €34,900 worth of the income that might be unreliable, we'll put it that way, okay? But still, there's a healthy profit there overall of €65,180. So I mean, you know, based on that alone, you should be able to afford the interest repayments. The other thing that you need to consider is, has this club got a good track record in terms of paying back loans and in terms of saving money? Well, if you have a look here, this club has paid back a loan during this year, a loan of 20,000. So it appears as if the club does have evidence here of a good track record in paying off its loans. Another thing to note here is the transfer from the Building Society. It looks as if this club also has a track record of being able to save money, essentially, which is positive from the point of view of somebody, you know, thinking about lending money. So overall, you might say that we could borrow 259,200. You can explain how you arrived at that figure as the possible loan figure. And then you could discuss why you think the club would be possibly in a position to be able to borrow that money. So you're discussing profitability, you're discussing security, you're discussing track record in terms of paying back loans and in terms of saving money. Okay, so that's kind of how you might approach part D of the question. Figure out how much they might need to borrow and then discuss their eligibility for borrowing. All right, so that's question 6, club account question, 100 mark question on the 2019 higher level leaving certificate paper.